Hello everybody. What if I told you that a single overlooked number in an earning report could determine whether a trillion dollar AI giant skyrockets or completely crashes on June 24th? Micron Technology has officially crossed that historic $1 trillion market cap milestone, a feat only two other memory companies have ever achieved in history. Shares of MU are up a staggering 244% so far in 2026, driven by a massive, unrelenting wave of artificial intelligence infrastructure spending. But when you climb this high and this fast, the stakes become incredibly intense. Wall Street leaves absolute zero room for a stumble, and the entire market is holding its breath for the Micron physical third quarter results. So, what is the make or break metrics that will dictate the next massive move for MU stock? It is not the total headline revenue, and it is not even the net income. The numbers that matter most is gross margin. To understand why gross margin is absolutely king for the Micron right now, we have to look at the staggering transformation of their core business model. Historically, memory chips have been treated like a brutal, highly volatile commodity. Prices would swing violently based on typical supply and demand cycle, leading to massive booms followed by painful, loss-making downturn like the one we saw in 2023. But the AI revolution has fundamentally altered that dynamic. Artificial intelligence models are growing exponentially larger, and they lean incredibly heavy on high performance memory, effectively transforming data storage from a commodity into a critical strategic asset. Look at what happened during the last earning report in March. Micron's physical second quarter revenue nearly tripled year over year to record $23.86 billion. But the true jaw-dropping metrics was the gross margin, which expanded from roughly 37% in previous year to a spectacular 75%. That kind of dramatic expansion is practically unheard for a hardware specialist, and it highlights an unprecedented level of pure pricing power. Because AI demand has coiled with heavily constrained industry supply, DRAM sequential prices spiked in mid 60% range, while NAND prices skyrocket in high 70% range. For the upcoming June 24th report, Micron management has set the bar even higher, guided for gross margin to reach a phenomenal 81%. This is precisely why gross margin is the number to watch. Revenue can easily grow on pure sales volume alone, but a gross margin combined toward 81% tells us exactly how much leverage Micron commands over its customers. If they hit or exceed that number, it proves to market that this hyper profitable pricing environment is fully locked in and sustainable. Now, it is true that the bears have their own concerns, pointing out that the rivals like Samsung and SK Hynix are racing to boost their own production capacity, while Micron itself is ramping up capital expenditure past $25 billion. This physical year, the fear is that if the supply eventually catches up to the demand, pricing power could erode. While a trailing price to earning ratio sitting in the mid 40s, critics argue that a significant amount of perfection is already priced into the stock. But here is why the structural bull case for Micron is incredibly compelling and why the long-term outlook remains overwhelming positive. The underlying fundamentals showing that this time is really different. The primary driver here is high bandwidth memory or HBM. This is the highly specialized ultra-fast DRAM that sits directly alongside cutting-edge AI processor in advanced data centers. Micron has officially confirmed that its entire HBM supply for the rest of 2026 is already completely sold out. That level of long-term visibility is exceptionally rare in the semiconductor industry. When your entire production capacity is spoken for months in advance, you do not have to worry about sudden price drops or inventory gluts. Furthermore, management has explicitly stated that they expect the tight supply and demand balance for both DRAM and NAND to persist well beyond the end of calendar 2026. Here, we are not just witnessing a temporary spike in the demand. We are in the middle of a multi year secular shift where memory has become a critical, irreplaceable bottleneck for the global AI computing power. So, as we head into the June 24th aftermarket report, do not get distracted by the headline noise. Keep your focus locked directly on that 81% gross margin target. Micron poses the right technology, an entirely sold out inventory, and an unprecedented level of pricing power in the most valuable tech sector on the planet. The fundamentals strongly suggest that Micron historic run is far from over, and the upcoming data could provide the exact validation long-term bulls have been waiting for. So prepare now. With that said, thank you so much for being here. See you next one.